So I'm going through my regular routine of, just being an internet troll during the day. For those of you that don't know, I work at night and I'm just really tired during the day. Then I came across this, and it inspired me to make a rapid fire video of answers to subscriber questions. So let's just get right into this, guys. I've gotten these questions a bunch of times, so I think it's worth making a video. This is one of those videos I was not planning on making, but since I'm being asked the same questions so many times, I figured I'd just make the video, put the video out, and people can refer to that video. Obviously, I'm still accessible via my Instagram, which I'll put on the screen right now. Feel free to ask me any questions and I will for sure answer because the channel's small. When I first started this, I couldn't wait until my channel got bigger, but honestly, I'm really enjoying being a small channel. It really allows me to interact with you guys on a more personal level, so I'm really enjoying it. I'm enjoying being a smaller channel. So here are the questions that I've been getting. Should I buy Boeing? I posted on my story that I was buying Boeing, and I am buying Boeing. People are asking me, should they buy Boeing? People are asking me, where should I start investing? What is a bond? Is now a good time to buy stocks? And we're gonna talk about the melt up.
No one asked that.
Now I realize no one asked that, but you'll see why it's relevant if you stay to the end of the video and if you hit the like button. You won't see why it's relevant unless you hit the like button, so make sure you do that. So should I buy Boeing? I like to answer questions with questions. Should you buy Boeing? Do you understand Boeing's business model? I actually have an entire video, I think it's 13 things that you should do before buying a stock. One of them is reading the 10K, 10Q, digging through, understanding the company, their revenue streams, their plans for growth. Do you know when Boeing plans to be profitable again? Do you know when they plan to get the 737 MAX back in the air? Have you researched into that? No one knows when it's going to be back into the air except for insiders, and really even they don't know because they still have to get regulators to approve. So you need to know all the risks that you're going into. So should you buy Boeing? All the people that ask me, I would say no, you should not until you look into that company. In my view, Boeing has so many government contracts and so many just contracts in general that literally America would have to fail as a country for Boeing to fail as a company. But that's just my 2 cents and based on my research, but you need to do your own research if you go into stock picking. Otherwise, you should just go into ETFs, which is our next question of the day. What is an ETF? Basically, an ETF is a basket of stocks. So for example, Amazon, Facebook, all of these companies cap weighted, and essentially what cap weighted is the market cap or the market capitalization, which is how much the company is valued at, or how much would it cost to buy the entire company, which goes up and down based upon what the market thinks of that company, of their revenue streams, their business model, etc. So I would just recommend baskets of stocks, different portfolios. Conventional wisdom says that your percentage of bonds to stocks should be based upon your age. I really don't see any problem with that recommendation, but I would even look into that and see what you want to do. Right now I have 0 bonds just because I feel like the yields are so low, but I have looked into and at times owned funds such as BLV, which is the Vanguard Total Bond Index, other funds such as SPTL, I don't know, I'm going to put it on the screen right now. It's basically a treasury bond fund, which is debt issued by the government, and we'll get into what a bond is next. Basically, the way a bond is created is a person, an entity, government, or whatever it is, has a capital requirement and they will issue a bond, which is debt, and in return they will give that investor in the bond a fixed rate of return. So these are traditionally seen as a very safe way to invest your money. Now this next thing is not a hard and fast rule, but it is typically what happens, and it has to do with the opportunity cost. And when stocks go down in price, typically what people will do is they will flood into fixed income investments such as bonds, and that will cause the price of bonds to go up. So if you have more bonds in your portfolio, that can reduce the beta or the volatility in your portfolio. In other words, it will swing up and down a little bit less because when your stocks go down in price, investors flood into bonds, and when there's more demand for those bonds, the price of the bonds goes up, so that'll just kind of balance out your portfolio. So the person that asked me that question was about 21 years old, and I did not start this channel to make recommendations. There's actually a lot of legal issues with that. What I'm here to do is just share my journey and what I'm doing and why I'm doing it. If you feel like that suits your needs, then you can also do that, but I am not on here making recommendations, and I am not a financial advisor. If I were you, I would not be in bonds right now just because the volatility of your portfolio right now does not really matter. You don't have a big enough nest egg to retire on, so if you take a hit in the short term, it doesn't really matter. The most important thing for you right now is just investing more money, depositing more money, and making more money. Last question before we talk about the melt up. Is now a good time to buy stocks? I actually have a video that is titled, Is Now a Good Time to Buy Stocks? And I would say yes, it is a good time to buy stocks if you think of them as what they really are, which is ownership in that company. If you want to own these companies, anytime is a good time. So for most people watching this channel, I've looked at my demographics. Most of you guys are millennials. Yes, now is a good time to increase your ownership stake in this country. And yes, now is a good time to buy stocks. It depends on your liquidity needs and basically what you plan to do with this money that you're spending. Unless you want to do trading, which that's a whole different topic for a different time, there's really never a bad time to increase your ownership stake in this country. And lastly, the melt up. Basically what a melt up is imagine a little economy with 3 traders. Let's say that these 3 traders are trading something around between the 3 of them that they know is worth $1, right? So one person buys it for $1, and then the next person buys it for $1.02, and the next person buys it for $1.04. And somebody from the outside, this retail investor, sees, man, these guys are over there making a lot of money. And they walk over and they buy it for $1.50. Now it's a 4-person economy and they're just passing this thing around. And it's still worth $1. The underlying asset is still worth $1. And eventually what happens is more and more people want to come play this game, and the price goes up and up and up. And eventually those 3 people that started the game, they're just going to kind of back out. And the only thing that needs to happen for stock prices to move downward is, imagine a real market, a market where there's people and there's participants. The only thing that needs to happen in a real market for prices to go down is for there to be no more demand. So once that price gets to a certain point, eventually no one's going to want to buy that thing for that price. So the price has to fall for someone to want to buy it. Anyways, so that's the concept of the melt up. People getting that fear of missing out and just rushing into the market. Asset prices go sky high, and what goes up must come down. So hopefully you guys like this little short video, but I gotta go, and I'll see you guys in the next one.